Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. I got Greg Machinery Pete Peterson on here to talk about what's going on in the world of equipment and auctions. Also, I'd like to thank John Deere for being the sponsor of this edition of Moving Iron Podcast. Greg, how you doing this morning?
I'm doing well, Casey. How are you?
Doing good, man. Doing good. It's it's that time of the year, right? We got that. Here we are, mid-May. This is when you start seeing a lot of auctions get booked for that late third quarter, fourth quarter time frame. That June, July time frame, you see a few. It's not unheard to see a few big ones pop up in that time frame, but this is that time of the year where you start seeing those longer term inventory, auction inventory, sell bills and those kind of things start popping up about that August, September, October, November, December time frame start to pop in there. So my sense of the temperature, I guess, of the marketplace as we're looking at it, feels like we saw a lot of stuff sell here at the end of the year. We saw a few bigger ones kind of here at the first quarter of the year. We've seen a lot of late season last minute buying, and so that tells you kind of a little bit about the mindset of what's the farmer out there, what they're doing. But also, I get this feeling that it hasn't gotten any worse, hasn't gotten any better. A lot of stuff come off when we got there. You talked a little bit about some of the decreases that you've seen in overall numbers year over year as far as inventory before you start recording. I'll have you talk about that here in a minute. But when I'm watching things move along, it still feels like there's some pressure in the air just because of, like I said, it hasn't gotten any better, hasn't gotten any worse, but we're still sitting at, hundreds of millions of dollars worth of inventory sitting out there and at 6.5% interest. So that number, that interest clock is still ticking pretty fast and pretty hard. So I guess as you're looking at the things that you see out there, Greg, and some of the conversations that you're having, what are you seeing in the marketplace?
Well, I think, like you said, Casey, there at the top, here we are in mid-May. So to me, there's always kind of been a buoy in the water. I always thought June 1st, being a Midwest, upper Midwest boy here in Minnesota, with dealer roots, I always sort of figured, get through planting, and then on the dealer side, you sort of assess how we're sitting. Now, the raw avalanche of late model large used units we saw sold at auction last year was incredible. We've talked about it. That was, dwarfed what we saw a decade ago in that downturn, 125 to 150% increase. Late model tractors, combines, planters sold at auction. But we've kind of hit a pause button here early, through mid-May of 25. So I just ran some numbers that we were chatting about before we started to record. So if you look at like 175 plus horse tractors, 1 to 3 year old units, through May 12th, the number of units sold at auction versus last year was down 49.6%. Similar on if you get harvest equipment, so that's basically for us at machinerypete.com, combines and heads. Through May 12th, we're down 20.8% versus last year. And the old small horse tractors, which can be problematic in the market, kind of a little pain in the butt if you're on the dealer side, but under 40 horse down 75% versus first 5 months last year. So maybe that was just a pause button. Now we hit June 1st through into the summer. Like you said, a lot of these big sales maybe starting to book on the dealer side. We'll have to wait and see. But, based on our auction data that we're looking at, if I were a dealer, and paying that 6.5%, which is, like you said, was extremely painful. And the inventory is still too high. It's not maybe a 5-alarm fire like it was a year ago. But I would think, based on what we've been seeing for auction pricing, I'd feel pretty good about if you had to move stuff out to auction. So the reason I say that is let's look at some late model bellwether items. Like let's look at the John Deere, 8R series, an 8R 410. So average auction price so far this year, Casey, is at $352,286, and it's actually up from last year. Last year it was $349,600. Not up much, but it's basically holding there. And then when I compare it to the average dealer ad price on a 8R 410, which that's what we call our machine repeat ratio, that correlation, 8R 410s are at 77.8%. So basically selling at auction for 78% of dealer ad price. And it's the same down through the line. 8R 370s are 75.4%. 8R 340s are 76.7%. So if I'm a dealer and I got too many of these on my lot, pretty good time to put it out to auction. And our friends at Sullivan's, I think, kind of proved that last week. They had a sale. I think it was for Van Wall. Not a ton of stuff, but they did have a 23 model 8R 310. I noticed low hours, 194 hours, and hard cash that sold for $339,000. I'm sure the dealer wished it would have sold for more, but the fact is that's the second highest auction price ever on a 23 model 8R 310. So again, I think the environment, if you got to move some stuff right now, is, better than it was a year ago.
Yeah. Yeah, I agree with that. I mean, you look at where you're at year over year and the numbers that are there, you are seeing not huge jumps by any means, right? Like you just talked about 349 to 352, right? I mean, it's not huge. That
better
to me, better than the other way, right? But to me, like 349 to 352, that's flat. Like you're holding. Yeah. You're in a holding pattern, right?
Right.
Now, if you start seeing that number move from 352 as an average up to, 365 or 370, then I think you're at a true upswing again.
Mm-hmm.
But before you can have an upswing, you have to start going down, right? And I think that's what we're at. And I think we're bouncing across that bottom right now.
Yeah.
And that's kind of where we're at. That soft bottom's been put in, right? Where you're going to see that fluctuation plus or minus 2 or 3% either way, on your sell to sell, depending on where you're at, what's going on, all the stuff that's happening, and kind of watch those things kind of beat along there. That's where we're at. We're at that leveling off point. And I think if you watch historically coming out of these things, this is the time of year when you start seeing that true bottom get put in, right? And I think that's where we're at. We're seeing that true bottom of the marketplace put in. Now, there's lots of rumblings out there. I've had so many conversations with guys about, oh my gosh, it's going to be a huge auction run here at the end of the year. Well, it's a huge auction run at the end of every year, right? It's not like, now this may be a little more than others, but I kind of look at it like this. When I'm looking at equipment, there comes a point in time where auction price is auction price, and it's just like selling a bushel of corn someplace, right? There comes a point in time where it's not worth it anymore. I'm just going to keep it in the bin until the price comes back up, right? And I think we're at a point now on the auction scale where I think if you put a bunch of stuff out to market right now at auction, the values are going to stay the same. And the reason for that is when you start seeing values stay the same, it's because the retail value of those machines that are being advertised are coming down too, right? Mm-hmm. So you have that compression point right there where is the juice worth the squeeze from the dealership perspective, right?
Yeah.
If you're looking at it from a customer perspective, the customer's looking at it going like, 6 months ago, I was buying stuff at auction because it was, 50 cents, 40 cents on the dollar. Now today, like you just talked about, it's 78 cents on the dollar, 77 cents on the dollar. So it's kind of if the dealer doesn't have exactly what I want, I'll go get this one at the auction. But the juice is worth the squeeze type of thing when you're looking at that retail to auction value. As those things come together and they stay together like that, the auction value doesn't have these huge wild swings where you've got this, 1 week it was X and now you're down 20% 3 weeks later. When those values come together and they get close, that's when you start seeing the stability in the marketplace. The index that you've been talking about there, I flip it around the other way because it sounds way cooler to do. It's 120% of auction, and those kind of things, so it's the same numbers, right? It's just my denominator and numerator are different than yours, so it's just I just flip them around. So as you're looking at those things come along, I've been watching that, and those have been getting tighter and tighter and tighter and tighter. And when they get tight like that, you don't see big swings in the auction market.
Yeah, it's interesting, Casey. Again, back to my buoy in the water, June 1st. We'll see what happens. I mean, we don't. That's the beautiful thing about this. We don't know. We can think we know what's going to happen at auction price wise, but we'll see. But it is that soft bottom you mentioned. It does sort of now. We've got enough. It's 5.5 months.
Right.
Where these values have been holding. Now, the last downturn, which is the biggest I've ever seen, and we've talked about it a lot, but from mid 13 to end of 15, that took 2 3/4 years to find that soft bottom at the end of 15 when I saw it level. So, did we do it in 1 year this time? Maybe you could say maybe two for combines, but maybe that
Yeah.
would make sense to me because I've talked about, there's more efficiency on the dealer side. Basically, there's fewer and now larger dealers being more aggressive versus a decade ago. There were more 4 and 6 stores. And there's way more efficiency on the auction side.
Yeah.
So when Sullivan's or whoever, Wheeler, has a big auction or a small auction with any dealer equipment, your buyers are from everywhere. So a couple other data points to support what you were just talking about. Let's shift it to combines. So John Deere X9 1000 so far this year, the average auction price is actually up. Last year it was 451.5. This year 452.25. So hardly up at all, but
It's stabilizing though, right?
it's better than last
Yeah.
year, which dropped last year. The average dropped 14.7%.
I know, right? Yeah.
Now, if you talk John Deere S790s so far this year, average auction is 315,591. Last year was 331,853, so that's down only 4.9%. Now that's like a historical average kind of depreciation on a late model combine versus the 15 to 20% we were seeing.
Yep.
One other trend I'd highlight is if you drift into the older equipment. That's really fascinating, Casey, because farmers are so pinched right now, but they need reliable equipment. So if they're not buying new, which we can look at the numbers there, then they just aren't. So if you get into combines, like if you look at a John Deere S670, the average auction price is up a good little bit this year. Last year it was 80,924. So far this year, 84,159. Same on a S680. Last year it was 86,786. So far this year, 89,6. So that 10-plus-year-old stuff, if it's good, all across the country, whether it's a combine or tractor, even planters, we're seeing those dollars being competitive bidding on that stuff because you're just playing in that $90,000 range versus $340,000 on a 2-year-old one or whatever. So it's really interesting time right now.
Yeah. Yeah. I always, my rule of thumb has always been when I watch the marketplace is I break it down into two halves, basically. So 1 to 5-year-old stuff, and 5-year-old stuff to me is like the teetering point. It all depends about the hours when you get to the 5-year-old stuff. But that 5-year-old stuff, 1 to 5-year-old stuff, the faster it's selling, the better the economy is. On the backside of that 5 to 10-year-old stuff, the faster it's selling, the more compressed the economy is. And so, it's Aaron Fennell and I we joked about this just the other day that we used to have this, like anything that was $50,000 would always sell, right? And it was kind of everything was 100. If it was $100,000, it would always sell. Well, now we're up to like it's 300. If it's $300,000 or less, it'll sell, And so it's just those numbers keep moving as you go through that, which is that's amazing because this last turn that we had coming out of COVID. If you do the math on those price increases that everybody took across that time frame, typical 3 to 4% is an average kind of year, and we saw between 2017 and 2023 almost a 70% price increase, depending on somewhere between 40 and 70%, depending on manufacturer and what it was and all those kind of things. But great, that's 10 or 15 years worth of price increases that you took in 1 year. So that's what's overcomplicating what we see happening right now. It's not so much the amount of inventory that we see happening, but it's I joked with a guy the other day that no one knows what their truck's worth until you want to go buy a new one, right? Then you find out real quick what your truck's worth, right? And same with the guy wanting to buy a new combine or something like that. He bought a new combine 3 years ago. He's in his mind, he's kind of running through his head, that should be worth X, and then you show up and you're like, what are you talking about? And then you start going through all the auction data and retail data and this, that, and other thing, and you realize, like, I guess that's what it's worth,
Yeah. It's 35 and a half years I've been doing this. What you're describing there is a market truth that the price of new and what's happening in the used market have always and will always be connected at the hip.
Sure.
So they just we go through up times and down times, but interesting, because I enjoy reporting on the 1 and 2 year old stuff, and it's obviously very interesting. Um, but covering the market from my angle, we never bring any predetermination. So we're just as interested in that 25-year-old stuff.
Right.
And to see what's happening there. And I have never seen in my 35 and a half years, this period we're in right now, where we've seen that 10-plus-year-old stuff in good condition move up kind of sharply. At the same time, the new sales are so dormant. I just haven't seen that quite the contrast. And I think some of it, I think we talked about it last week. Farmers, even though the tons of pressure on them right now, needing that reliable equipment, and they've almost been conditioned to these massive price increases. And now you throw in the tariff stuff, and hopefully good developments there this week with China. Maybe that'll back off a little bit. But the writing on the wall is like, this stuff's going to go up another big chunk. So it's like it sort of normalizes paying more for that nice 8, 10, 12-year-old one. But our data still shows, if you're a farmer out there listening and trying to do long-term planning for your equipment fleet, one thing I would say with certainty that our data has shown for years is that kind of that 4 to 7-year-old age range that you were talking about, Casey, either side of that tipping point, 5-year-old you're talking about, our data shows that that's like mass depreciation level. And getting a low-hour unit in that age range, when what you and Aaron were talking about, that 50,000 mark, now it's, to me, it's close to 200,000. I always call that the machine repeat limbo bar. No matter how crappy the economy is, if you stay under that dollar amount, everything sells.
Everything sells. Yep.
So consider if you get a nice low-hour, say a 5-year-old, in 5 years, you're going to have a low-hour 10-year-old one that everybody wants, even if times are bad. So to me, that's where the value is as a buyer.
Yeah. And I think you hit on something good there. I mean, that 1 to 3-year-old stuff is directly affected by the price of new. That's where it has. And once you get past 3 years, that kind of starts to fade a little bit into that 4 to 5 to 6-year-old stuff. That's when you start trading for hours, right? You might have. So I've seen plenty of times where you have a 2-year-old newer machine that has more hours on it than a machine, like by 1,000 hours, something like that. You might be looking at a 6,000 hour something versus a 7,000 hour something, but the 7,000 hour something is 2 years newer than the 6,000 hour something, and that 6,000 hour something is worth more because it's just because you're looking at the hours, right? At that point, years not such a big play. And I think that's where we're at right now. We're guys are trading hours, and they're looking at bang for their buck and the value that they're going to get from that. Not that there's not bang for your buck and value in 1 to 3-year-old stuff, but when you're looking at trading in something that's got a high equity point, and you try to maximize your equity to keep whatever you're buying either at almost zero or at a really small note range. That's what we're seeing happen, and I believe that's driving the backside of the marketplace, right? That 5-plus-year-old stuff significantly more because I still have lots of conversation, Greg, where guys are still waiting on a decision from the bank if they're going to even get capitalized this year. And that's here we are, May 15th. And so it's
no question,
scary
more
time.
pressure.
Yeah,
more pressure on the lending side for sure.
Yeah.
One interesting little trend over the years I've noticed, Casey, it's been fun talking to farmers, doing my thing all these years, and of course they're very smart. They pay attention to what stuff is selling for, and of course it's got easier over the years versus when I started. There was no internet. We had to put our auction price book 4 times a year, but even then farmers were glued in, and they notice that magic limbo bar 10-year-old stuff with low hours. So over the years, as they've grown their operations, a lot of guys getting that second planter, that backup horsepower, second combine, whatever. And it seems to me like a lot of times with an eye on, it's weird, but get that machine, but keeping hours off of it. It's there when you need it. But then again, they know if you get out into that 8, 10, 12-year-old range with low hours, man, you just have a shining diamond that everybody wants, whether it's a dealer on trade or sell it at auction or private. So again, farmers savvily absorbing this data and putting it into action on their farm. It's been fun to watch.
Has been. It's a neat dance that happens every year as you look at the equipment business. So, well, Greg, it's probably a good place to stop. Folks want to have you come speak at their event. Easiest way, just go to machinerypete.com.
Yep, hit us on machinerypete.com, little email link on the bottom, shoots a note into our office, or hit me on Facebook or Twitter, wherever. And yeah, it's always fun to get out to auctions or events and I get a chance to visit with people.
Right on. You on the road anytime come soon? People can find you?
Well, we've got a couple auctions we're looking at. I don't have anything the next week or two, but I am watching a sale, I should say. I don't know if it's today as we're recording this. Yes, today. S&J Auctions. It's an online sale using Auction Time, but it's out of Kansas. But they've got a 24 model S780 with 288 SEP hours on it. So I'll be kind of interested to see what that one goes for.
Yep, for sure. All right, Greg. Well, appreciate you being on the podcast. We'll catch you again next week.
You bet. Sounds great, Casey. Have a good one.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
Hello and welcome back to Moving Iron Podcast Markets with Sean Hackett. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
I'm doing good, Casey. Back, the rainy season in South Florida has begun. Got our first 3 or 4 incher yesterday, on the route to probably 60 or 70s before we're done.
Have to take your kayak to the grocery store, huh?
Well, it's 6 months off, 6 months on in South Florida. We haven't had a drop of rain in probably 5 months.
Yeah.
We had fires in the Everglades, and now yesterday was even the ducks needed umbrellas yesterday.
Yeah.
So,
well, you're back in the game, Sean.
Back in the game.
Back in the game, baby.
Yeah.
All right, man. A lot of stuff going on. Let's start with the cattle market here. When you're talking to cattle guys and they're telling you that the price of cattle is getting crazy, that's saying something. And I think as we're looking at where we're at right now with the price of cattle, we have hit the peak. So obviously there's going to be some downside pressure sooner or later. Can't keep riding this train forever. We've been talking about that though for the last, feels like 2 years almost, about the cattle market and where things are headed. Yes, Sean, as you're looking at the cattle market right now, what are your thoughts?
Historically, going back to 1970, which I call modern day times, things have always occurred when herd rebuilding has begun. Going forward, herd rebuilding has absolutely, unequivocally begun, and it's really started about, according to our calculations, it really started in the fourth quarter. So that means we're now expecting a top within 12 months time from the beginning of herd rebuilding. That's just the statistics of it. Now, tops in any market, Casey, are always made with one final panic, chaotic gasp higher, usually on some news that is so unbelievably bullish that it takes your breath away, and you get and then the market makes the top and it never looks back and never retests that top. This ban over the weekend that our ag secretary put on due to the escalating worries over screwworm in Mexico, where we're not allowed to import cattle from Mexico into the U.S., which is an important supply source for us, seems to potentially be providing the potential for that final cathartic surge higher. Oh my gosh. And the prices get nuts, and all the buyers say, we're done. I don't care. We're not putting meat on the shelves. It's going to be bare. Everyone can yell and scream, but we're not going to do this. Packer margins are already negative already. So it seems to me this is where we're at. And so when when you're looking at long-term charts and trend lines, and typically using linear regressions and such, 220 live cattle and 320 feeder cattle have always been what I would call your extreme upside potential targets in the market. Doesn't mean you have to get there. Doesn't mean you will get there, but it means in a crazy scenario, those targets are possible. And if you look at least the live cattle chart, we're in hunting distance for reaching that. So if we put out a communique yesterday to our subscribers, Casey, that this is the time for max protection of your cattle equity. I mean, if you're not LRPing the hell out of feeder cattle to the extent that you can, if you're not putting floors under the market to the extent you can, if you're not selling and forward selling as much as you can, at these kind of prices, no, you can't pick the top. Doesn't mean I know where the exact top is. It doesn't mean the first sale you make is going to catch the top, and that's not the point. The point is once it starts to go back down and you enter the vacuum down, trying to get out of cattle, trying to sell cattle, trying to protect cattle becomes almost impossible. You have to scale in the final move of a panic. I feel this announcement on over the weekend is the classic kind of announcement that puts in the final high. I threw out those targets 320 and 220 for feeders and live because our work says that that is likely to hold the market back. Doesn't mean can we go to 230 and 330, but I'm just saying that it's a benchmark. It's an idea of what you ought to be thinking about. But if you're not doing some maximum downside protection action right now, then I don't want to hear about those crying 2 years from now when they can't make money in the cattle business.
Yeah, it's you can always, if you can feel even when you talk to people, like there's a lot of anxiety in the marketplace right now.
Well, and there comes a point where buyers just aren't going to do it.
Yeah.
Well, it could be empty supermarkets. Yes, there will be. At some point, the buyer's saying, "I can't make money. I'm not doing this." The consumer says, "I'm not paying this," right. And that's it. I mean, and I think this is going to provide. Of course, Murphy's Law says it's going to happen during the grilling demand ramp up season. Of course, right. Which provides the maximum upside possible, right?
Right. Yeah.
Like a major top that lasts for years and years and years is a culmination of a perfect set of circumstances that come together simultaneously to create the perfect bullish storm. You couldn't dial this any better right now. So whatever you get out of this is it for a while. This is it.
Yeah.
For a while. And it could be it. It could be it.
Yeah.
Like this is it for, and you look at the chart, well, remember 5 years, like 2014, that was it until it took 8 years to, get back there again. So I think we're rapidly approaching, this is it for a while. And if you don't take full advantage of that, you're going to get it for a while later. It always happens.
Yep. Yeah. I do the, every year I get a cow, take it to the, to the butcher and come back home in boxes instead of a trailer. But it was amazing. I sit and talk to you about this all the time, and I figured I would have a pretty good idea how much it was going to cost when I did all this stuff, but out of sight, out of mind type of thing, and you get your bill and you're like, oh wow, that's like $2,000 more than it cost last year to do the same thing. So I mean, it's amazing how much all that.
And this is the kind of thing where it finally makes everyone look at, especially when now everyone's worried about the economy and we're getting a big slowdown. People worried about losing their jobs all of a sudden. Housing prices are falling, and then everyone starts to really look at, we just, we gotta consume less beef here because when you add it up and you put all that, and it could finally be what switches people to more pork and some cheaper proteins. I know that's been a talk about point for a while and it hasn't really materialized, but I think this is what could catch and push the consumer to say, hey, I can like pork a little more than I used to like it, and let's do a little more of that. And so, what's good, what's bad for cattle is probably good for pork. And if the talks over the weekend, that a trade deal is in the making between China and the U.S., At least they were lowering tariffs for 90 days. Apparently, if you can believe anything that's being said on a daily basis, not that anybody can, because it seems half the time nobody knows what's actually happening, or they're purposely saying something that's not true. Apparently, Trump and Xi are going to speak at the end of this week about a trade deal. If that is true, my feeling is they already had a trade deal that they negotiated. China never really delivered on that trade deal. My view would be, let's go back to that trade deal. Let's tweak it a little bit, and let's just make an addendum to it, and let's move, pay it forward, and let's start it again. That to me would be the easiest solution here, because it was agreed to then, and it probably is the easiest thing to agree to now. If that's true, then pork demand from China is going to start to grow again, and that could be very, very good. For the hog price, for the pork price, which has not seen the kind of exciting profitability that the cattle business has seen for quite some time. So we could be looking at a switch in fortunes, where cattle for several years during COVID and during those fires of those packing plants that just crushed them. They had the worst. It was the worst of times. It was the best of times, right? The Steinbeck book, and now it looks to me like that they've been profitable for too long, and the hog business has been unprofitable for too long. And it's time to switch the gears here, and have the hog guys begin to rebuild their equity in their businesses. So I'm feeling really good about pork. I'm feeling really, really bad about the future of cattle prices, but I'm feeling really, really good about the opportunity producers have right now to do something unbelievably smart, like a decade decision here. You don't get a whole lot of decade smart decisions, but this looks to me to be one of them.
Yeah. Well, it's when you feel the nervousness when you talk to guys, and you hear the news coming out, on the market side of it, the packer side of it, and those kind of things, and you hear the nervousness when they're saying stuff. It's time. It's there. So
it's kind of like the wheat market. When we were trading the war, and we were trading for $12, $13, $14, whatever it was at the time, and everyone was projecting 20, 22, 24.
Yeah,
and panic. Frozen markets. That was your decade opportunity to sell.
Yeah.
Now. It looks like we're getting our decade opportunity to buy. If you, I mean, it's, but it also comes down to. I don't mean to laugh. It's not funny where the wheat price is right now. It's not funny what it's doing to those that produce wheat at the moment. But it also it provides a constant for every action. There's an equal and opposite reaction, right? Newton's law. The bigger the bear, the bigger the bull. The bigger the bull, the bigger the bear. The modular elasticity will go in equal directions as you overshoot in either direction. We are now clearly overshooting the downside, and the longer this overshoot persists, the more significant the upside will be when it does switch. So there you have it. So
Yep. All right. Let's talk a little bit about what's going on with the grain market here. So we talked a little bit about the wheat market here. We kind of hit on that a little bit, but the Kansas Wheat Tour is going on right now, usually a big indicator for the market as to where they see things are at right now. I think the market has built in, it can't get any worse than what it is, but as far as bullish sentiment goes, because of the amount of rain they've seen in Kansas. But if you live in Kansas and you talk to people from Kansas, they've got some good rains, but it's still pretty dry right down there. So now again, wheat just needs about 3 to 5 rains a year, and if you get them the right time, it changes the whole perspective of everything you got. But if you're looking at how the wheat tour starts, they start in Manhattan this morning, they work their way across to Colby, and they end up back down Wichita by the end of the week. Huge dynamic in landscape, huge dynamic in moisture across that part of the state. So I guess, Sean, as you're looking at this, I guess as you're kind of sitting here looking at where these things are, what kind of news are you expected to see? And then also, what kind of dynamics do you think that'll put to the marketplace?
We've been following this crop tour for as long as it's been going on. And the trend has always been that if the market's super bullish about, meaning the weather's been dry, they expect terrible production, it's all going to be awful, they always come in and say it's going to be better. And whenever I've seen the market say, "Oh my gosh, the weather's been ideal, we're going to have just a massive crop," they always say it's going to be not quite as good. And I'm not saying that to criticize them. I'm saying that the market tends to and this is not just wheat, in any market, they tend to get too excited about how bad the crop is, and they tend to get too excited about how good the crop is, and they overprice it. So the likelihood, given that long-term trend of this crop tour against the way the market over embellishes good and bad, says that they're probably going to say, I'm not sitting here saying they're saying it's going to be a bad crop. We're not talking about that. We're saying is, I think they are going to say it's a better crop than the current market is pricing in. That it's going to be good, but not quite as good as the current market is expecting, or is pricing in with, as with where wheat prices are right now. Almost $5, and actually HRW trading at a discount to SRW. That does not happen very often, where your higher quality wheat trades below your lower quality wheat. That is extreme negative view about the HRW crop. So my expectation is that they're going to say it's good, but the market's going to say, "Oh, it wasn't quite as good as we thought," and it probably leads to a short covering rally. I think the crop tour ends on the 15th, Casey. That's when I think they come up with their final conclusions. I do think we get daily updates today. Their crop tour starts this morning. I think we get a little color each day. But I think when we get to the Thursday or Friday, we're going to have an understanding that it's a good crop. It's not quite as big as we thought. And the numbers that the USDA put out there yesterday showing greater ending stocks than we have this year are probably too high. The market's going to dial that down. That's my best assessment. I have no idea what the wheat quality board's going to, council's going to say. I'm not in the tour. I'm just telling you the historical context of the trend of this tour versus market expectations. I would expect the tour to say, not as good as the market is thinking. It'll provide some type of a relief snapback rally. Doesn't mean bull market. Doesn't mean we're going to go take the offers out. It just means it could be the basis for putting in a low, and maybe a really, really, really important low, like a really, 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 really important low, like the low we had in 2020. The low that we had, back in 2006. The low that you can put a number on, or the low we had in 2016. They go, we didn't go back there for a long time. The market's giving me this feeling that we're just it's a perfect set of circumstances. The ceasefire in Russia, you couldn't dial everything. Everything's dialed in for maximum. There's no hope, no future. A razor blade to the wrist is a good marketing play right now. That's how it feels to me right now.
Yeah.
So.
Okay. So supply and demand report came out yesterday. Walk through that a little bit and any surprises to you.
I view this. Look, this report doesn't really mean anything. It just is a way to. It's a starting point. You have to start somewhere.
Right.
So the USDA says, okay, we're going to assume trendline yields in winter wheat they actually make because of whether they actually can alter a little bit. But of course they're thinking big crop. I think they're too big. But with corn and soybeans, they just say trendline yield. The planning intentions report. We're going to put that in there. We're going to kind of keep them in where it's been. And that's our starting point. And then we do this. When I look at the numbers, and you look at it with the ending stocks for soybeans, that is not assuming any renewable diesel mandate increases. That is not assuming any trade deal. That's assuming demand stays pretty crappy. And it's uncomfortably snug pace. Like we don't have a lot of wiggle room in that number that they put out yesterday. It's low. And if we cut a trade deal and China preferentially buys more soybeans from us because that's what they have to do, like they did last time, and those numbers on the USA's balance sheet are too low. And if we increase mandates on renewable diesel from 3.3 to 5 or 5 plus,
knowing you're
meaning the crush that the USDA used in that report is too low.
knowing you're
And if we have any kind of dry July, which we're anticipating, we run out of soybeans in the United States very easily. Like the numbers don't work. They won't work. Now, of course, you never run out because the market makes sure you don't run out because you'll get the price to where it alters that, right? But we have no room for error here at all on any of these fronts that I just mentioned. I don't know if all those things are for sure going to happen, but any one of them or two of them or even three of them, we'll have zero bushels of carry out on the balance sheet at current price levels. Soybeans look constructive here for me. Because if you think of it this way, all right, well, if we increase renewable diesel to 5 billion gallons plus, and we need an extra 5 or 8 million soybean acres next year, well, what the hell happens to corn? If we go from 95 down to 88, it's going to be really, really hard to make the corn numbers work next year. Like you can see where this goes, right? Soybeans have quickly gone from the dog to the darling. And if I'm looking at what could turn the grain markets around, sentiment-wise, the soybeans and the soybean complex look really, really interesting. If you look at the charts, breaking out to the upside, we broke through some overhead resistance yesterday on a daily closing basis. I think soybeans get us out of the corn and the wheat negativity story and start to paint a different narrative than the one that we've been painting. The problem with corn is, with the planting pace being as good as it's been, Casey, the market's going to say 95, 96. And that means that our ending stocks are going to grow a little bit. But remember, they put out 1.8 billion bushel carryout, Casey. USDA put out yesterday for corn. That still is not that much considering 95, 96 million acres. And that's not including any extra demand if we cut a trade deal. And a lot of the thought process that the EPA could actually increase mandates for ethanol too, which a lot of people don't talk about. If that's the best we can do with 95, 96 million acres getting planted, and let's say we have a crop that comes in a little bit below trend, if we have a dry July, which is what we're anticipating, that 1.8 becomes 1.3 to 1.5 again, right where we've been. I mean, we're right on the edge. It just seems to me like right now, and I get it, it's May. It looks, the planning is going well. Everything looks great. Everyone's projecting the biggest crops that we've ever produced because that's what they always do in May. They always say things look great because they usually always. What else are you going to say? Because no one ever is going to project anything other than that because everybody waits for something to happen to tell them they're wrong about that. But it sure seems to me like we're dialing in too much. Everything's going to be just perfect. And I just see a ton of things that say it might not be so perfect. And even though U.S. wheat production, at least HRW production, I don't think SRW production is not going to be good. All those incredibly heavy rains and all the issues. But the HRW is certainly going to be a good crop, and we're going to have a lot of that to move. And I get that. But when you look at the global situation, the EU crop looks terrible. Drought furthering as the winter wheat crop's trying to really get going here, and joint and everything. Russia-Ukraine crop doesn't look a whole lot better than last year. Their exports are way down. Their supplies are way down. So if you just get away from Kansas, and I mean this, if you just get away from the focus of Kansas, the picture is considerably more constructive than it was a year ago. The only thing we're trading right now is Kansas. And I get it. I understand it. But it also doesn't make any sense that in a global market that you would be hyper-focused on only one small region, albeit an important region, and say that supply is the only thing that matters to the wheat market. It's important, It's not that it's not a factor. We're the fourth largest exporter in the world, not the third, not the second, not the first. We're the fourth. But it's not as important, I think, as the market is anticipating. As such, we are mispricing wheat. Sooner or later, as we spoke about, this modulus of elasticity will have to reverse. And the bigger the bull, the bigger the bear, the bigger the bear, the bigger the bull. That concept, despite AI, algorithmic trading, such forth and so on, that does never ends. That continues to this day, that type of trading pattern, that type of psychology. And when you look at speculators, not that this, this doesn't guarantee anything, but, they are at their highest short position as a percentage of open interest that they've ever been at. Yes, can they get larger? Sure. Are they going to buy back right away? They don't have to. But eventually, all of them will have to buy back. And if they buy back because of a bullish reason, good luck trying to get a farmer to sell at a loss. I think it's going to be very difficult for them to get out of this position easily, and we're going to have to, move a price to a more reasonable level that makes the farmer's balance sheet pencil out a little bit. But we're not there yet. We're still in, the rain makes grain, the crop looks great. The chart pattern is broken down, and we're just going to keep pressing that until we can't press it anymore. I think that's why I'm mentioning, we're discussing this weak quality board crop tours. It could be the first non-emotional fundamental to move the market. Up to this point, it's all emotion. Oh, the rains! It saved the day. Blah, blah. It's all speculation. It's expectation. It's just throwing in the dream of this massive crop. Then somebody actually has to go in there and cross a T, dot an I, underline a word, write a report, put some numbers down, and it takes the dream, it takes the fantasy, that brings the fantasy to something real, and that oftentimes is an important turning point. I really think there's potential for that to happen this week, later in the week. Based on the history. So they're a very important week to watch. Technically, for anyone watching the show that wants to know, what would really show that the winter wheat market is turned around is a weekly close back above last week's Friday close. You just look at July HRW, look at September HRW or SRW. Pick your wheat of choice. Look at the close last Friday. Whenever we get a weekly close on a Friday that's at or above that number, that is what's considered a breakdown, failure, reversal, higher. That's telling you that the rubber band is uncoiling the other way. Now, obviously, we're not there. We're still making new lows today. Okay, but that would be the technical pattern to watch in the weeks ahead for when the turn might be happening. Until then, the trend is your friend, and it's down. And that's where we are today.
Good. All right, Sean, good stuff as usual. Folks want to reach out to you and get more information about what you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT advisors.com. Our Twitter page is @Faradix11. I have a LinkedIn page for those that want, and I always try to remind everyone, we don't spend all our day thinking about things to put on Twitter and our website. From time to time, we'll put some things out there to help people with our forecasts and what we do, to see how we do things and how we approach the markets might be of value to those that watch the show.
Right on. Sean, appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Thanks so much.
All right, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking. Man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. We got Christopher Murray from John Deere on. We're going to talk a little bit about the G5 display and the essentials that go with that. Christopher, how you doing today?
Hey, Casey, I'm doing great. How are you today?
Doing good, man. Doing real good. Before we get too far in the weeds here, let's talk a little bit about you and your career so far at John Deere.
Yeah, thanks. So, as you said, my name is Christopher Murray. I am in marketing for our precision technology around displays, receivers, and advanced technology. I've been with John Deere for 17 years now and love every bit of it.
Right on. Well, glad to have you on the show. Looking forward to this. So, working in a dealership for almost 20 years now, you saw the advancements of displays and how they came through and the technology associated with those. And I think we'd probably just kind of set the table for a little bit of what we're talking about today. It's probably worth going back in time a little bit and talking about those displays, what that looked like. So when the first one, the 1800 display, the old brown box, and you had the 2600, 2630, and then the 4630, 4640, and then we are at the G5. And I guess just, as a 50,000 foot view of that, kind of walk through that history of those displays and what they did and how what how you've built on that technology throughout the years.
Yeah, it's fun to see that in such a short time, just a little over 25 years now. Precision technology has been out there. Like you said, everyone knows it as the brown box, our original display. It was released originally to document yield and during harvests, and that's where we really entered the precision technology realm, making yield maps for customers in harvest. And so it gave a snapshot in time. And as we've kind of marched along with displays, we started with the brown box, but quickly moved into our Green Star 2 technology displays. But we brought in AutoTrack just over 20 years ago, which is kind of interesting to think of. And, customers quickly picked up, they adopted AutoTrack, saw the value, section control with that. And so like I said, we quickly moved to the 2600 display with that, brought in touchscreen technology. 2630 took us to a whole nother level. So it started bringing in other features. It brought along, obviously, AutoTrack section control, but you think about across sprayers and then combines. So we could start to document passes and tillage and planting and then spraying and harvest. And so it started pulling that story together. During that time, we had Apex, the software that we were capturing it in. We went from JD Office to Apex, and then now John Deere Operations Center. And 4640 was a great universal display as well. Took that 2630, built upon it. It brought automation technology. So things like turn automation, AutoPath, AutoTrack implement guidance. So just to name a few. And Machine Sync, for instance, brought all that into a package to make it easier for customers to spend time focusing on what's most important when they're in the field, the job at hand, instead of necessarily pushing buttons on a display or on the armrests. And then today we have the ultimate display, the G5 family. So whether it's G5 or G5 Plus, we have the biggest displays that bring the most precision, the most productivity. And it's really focused on taking that automation technology into the next step, and that is our Sense and Act. So customers may have heard of See and Spray that we have on sprayers that runs on G5 display. Our harvest automation, our customers get 20% more productivity utilizing that harvest automation technology than running the machine on their own. Apples to apples machine, that technology is a 20% productivity boost, something that they truly experience. And then recently released is our autonomy. So G5 displays enable that autonomy. So that's the kind of the pinnacle where we're at today.
Right on. Yeah, there's a lot of really cool things that have happened along the way. I remember when the touch screen came out, and that was the coolest thing on the planet because you didn't have to use the keyboard anymore. And I hated that keyboard. I just could not ever get it to work with the arrows and this, that, and the other thing. But the touchscreen really changed the way people do things.
Amen.
Let's talk a little bit about turn automation because I think those are the building blocks, right? That's like the light, and you see these different things out there. But as you're looking at turn automation, you have it for on tractors. You have turn automation now. So you're talking about tillage pass and the various passes that you make with turn automation on a tractor. Then you have a harvest pass, and now you have it on the sprayers, and now you have a sprayer turn automation. So now you're really in a position now to where you have unlocked for the most part, the building blocks are all kind of all in place now for automation. Talk a little bit about turn automation, what that looks like.
Yeah, and you hit it right. We've had it on tractors for a while. So just as you said, whether you're tillage, planting, again, turn automation helps you really focus on the job at hand. I don't know about you, Casey, but when I'm in a tractor after about 12, 14 hours, I start getting a little sloppy. I'm tired. I'm making decisions all day, and turn automation doesn't. It makes that consistent turn pass after pass. And so you don't lose your productivity, especially if you're up against a rain event or whatever. You can, again, focus at the job at hand. Customers have really enjoyed that. They've adopted the technology. We went from tractors to combines just a couple of years ago. 2 seasons ago, in fact, we introduced it on combines. And so again, customers could focus on, you think about unloading on the go, using machine sync. So the combine operators, watching that grain cart and filling it to its capacity. And it then allowed at the end of the pass where they can just turn around, the machine turns itself. They're just running speed and header raise and lower. So again, they're focusing on what's going on, not, hey, am I going to turn and miss something? Right. Machine has it in. But customers have been clear, like, hey, this is great technology. When are we going to get it for sprayers? And so we're excited to share that for 2025 spraying season. We've now released it, AutoTrack turn automation for sprayers. And so it doesn't matter if you're in a tractor, sprayer, or combine, you now have that same feel and same execution at the turn row. So the productivity goes from each step in that field.
Yep. Now you have, like you talked about, you have seedbed prep, you have planting phase, you have the application phase, and you have the harvest phase where really you're just, like you said, you can focus on what needs to be focused on when you're out there and not making sure that you didn't, turn too soon or turn too late, didn't fold something up before you need to, type of thing. So it's wild to watch how fast this is growing. And you talked about it. If you look at this technology, how it's been over the last 25 years, it's like this last 5 years of technology in farming has really boomed. I mean, it's gone from, just managing yield, what that looked like and documenting those yield things and really seeing how that worked and get these pretty colorful maps that come out that show things to where now you're really dialing in agronomic decision making and also what your, the efficiency that you have on the farm. It's really been a very cool journey to watch this take place.
It absolutely has. And like you said, it is cool, but when from a customer standpoint, when you're looking at your profit margins and everything else, right? It's like, where can you gain those efficiencies? Where can you, and I said, focus at the job at hand, like what's most important is when you're planting, for instance, instead of solely focused on machinery, like, am I turning at the right time? Like you can also be, we're documenting what the planter is doing, but in real time, you can see it on the screen and you can be focused on that. Are all the row units performing up to their potential? And again, all that has a next step in the season impact, ultimately impacting your paycheck at the end of the year.
Yep, for sure. All right, let's talk a little bit about some of the essentials that are there and some of the ease of entry into the new G5 display.
Yeah. So for 2025, John Deere has launched what we call our Precision Essentials package. We know there's customers that are new to precision technology, and we have customers that are using multiple years worth of technology out there. So, we went through at the beginning different displays, and so we put together the Precision Essentials package that includes either a G5 or G5 Plus display. So the G5 Plus is a larger touchscreen display. The G5 is a standard 10.1 inch versus 12.8. We also packaged a Starfire 7500 universal receiver and a JD Link modem. And so the customer can take that hardware and put it on the machinery they already have. And so you might think, let's just go back to an 8430 tractor, for instance. Great machine. And there's a lot of them still out on the farm today, right?
Oh, yeah.
That 8430 tractor can update to the G5 display with a G5 advanced license,
Mm-hmm.
that Starfire 7500 receiver with the SFRTK signal. So they have sub-inch accuracy signal, so RTK, all from satellite. And then that JD-Link modem, which connects them from the field to John Deere Operations Center. So the machine's sending that data wirelessly from the field in almost real time. And then that 8430 tractor is now equipped with the essential hardware that can perform a lot of that automation technology that we just talked about that you can get with a new machine and from the factory. They can now do that on that already owned 12, 15-year-old tractor without upgrading equipment. We love selling new equipment, but we know that not everybody is in the market to buy a brand new machine. And so this gives them the efficiencies and productivity and ultimately that profitability on the machinery they already have.
Yeah, that's so you think about an 8430. Are you rolling back to the very first year of the 30 series tractor? Is that
sure? Let's go back to 2005.
2005. So you're 20 years back almost. It's amazing to think about that. I remember when I first started working at the Deere dealership, that was like the creme de la creme of tractors. And now here we are talking about 20-year-old technology or 20-year-old tractors that you can now put on current technology. I think the precision upgrade side of it to me is the life cycle of the machine now looks completely different than it did, 5 years ago, right? I mean,
absolutely.
You look at a used piece of equipment today, and when I first started, you looked at a used piece of equipment, and it was whatever, right? And in order to get the newest technology, you had to go buy the newest machine, and I got you. Right now, you're looking at these scenarios where, like you're talking about, you have an older tractor out there, just do what you want with it, or keep it, trade it in, sell it, whatever you want to do, and if you're not, here you can put this new technology on a 20-year-old machine and still get the same efficiencies that an 8R 370 is getting. I guess that would be an 8R 295 or whatever it is now. That would be the equivalent of that tractor, but that would be it would be so as you're looking at how those works, you have that opportunity and that flexibility to do what's best for your farm and put those building blocks in place to help you be successful as you need them to be on your farm. This is I think you're giving customers an opportunity to be to do what they need to do when they need to do it.
Absolutely. And the example I use is thinking about going to the full step of all the capability, right? But the other part of this is, and I mentioned is, if you're new to precision agriculture, precision technology, it's a great package. It's low costs. It has a yearly license, so you can tailor it exactly to what your farm's needs are. So think about maybe, let's say this. That's maybe you have a 7800 tractor that you're doing. Hey, you're cutting, baling hay, and that 7800 can take advantage of auto track, and so we have just an auto track license. Maybe that's the first step for them, and so again, it's a great package to connect that tractor. They can document their cutting in John Deere Operations Center. There's zero charge. It's free. You can go out and make an account today. The data goes in there, and they can start making decisions that impact their farm in a positive way and no longer have to guess. And so all the way across the spectrum, we can help those customers out.
Yep. Very, very cool technology. I think this is changing the landscape of equipment and how people buy equipment, how people look at equipment, especially on the equipment side. And I think this is opening the door to more technology on more farms as they need to build those building blocks. The smallest farmer now can have the same technology that the largest operations have and have that same level of efficiency across the board. So it's a very cool time, I think, to look at equipment in the farming sector right now.
Absolutely.
Well, Christopher, did we miss anything that you want to make sure we talk about?
If the only thing I'd just really wrap up with is, if customers want to learn more, if any of the listeners want to learn more, first, you can go to Deere.com. You can find more information there, or go to your local John Deere dealer. They can help spec out exactly to what your farm's needs are based on your equipment and the jobs that you're doing. So they can give you more information and help you with the pricing side of it.
Right on. Well, I appreciate you being on the podcast. Hope we can do this again sometime. So we'll catch you again next time, Christopher. Thank you so much.
Thanks, Casey.
All right, take care. Stay tuned for more Moving Iron podcasts after these messages. Mark your calendars for the 2025 Moving Iron Summit, September 24th through the 26th in Austin, Texas. We'll dig into what's happening in the used equipment market and how dealers are adjusting. It's a chance to connect with others in the industry, share what's working, and get a better handle on what's ahead. You want to be part of the 2025 Summit? Visit movingironllc.com for all the info. Hello, welcome back to Moving Iron Podcast. Got Aaron and Fiddle back on, talking about what's happening in the world of equipment. Aaron, how you doing today, bud?
I'm terrific, and yourself?
Can't complain any. It is, here we are. It is going into
Middle of
May here. So we're right in that deep south wheat run starts here before too long. Starts making its way north, and during that time frame, it's not uncommon to see a bunch of combines maybe during this time frame as we start looking into that field. But I think the one thing that is still looming over the overall kind of crux here of the overall industry is that there's still a lot of equipment out there, and it's the same characters that we've seen the whole time, right? There's not been, I'll argue that the combine inventory, and people want to jump up and down and scream, you don't want to do this, but I'll argue that the combine inventory is more healthy, right? It's the least sturdy shirt in the hamper, right? What's out there. But, row crop tractors there's still a ton of row crop tractors out there. And I'm talking like, I'd say 275 up, to like 400 horsepower. There's still plenty of those out there, especially on the 350 plus side. There's still tons out there. But, I'm looking at this. I'm trying to figure out where's the market go from here. What's the next thing look like? More help. I don't see a huge correction in the marketplace coming, but I do see a thinning of the herd coming between now and the end of the year. It just feels like there's going to be a lot of opportunity to see some big sales happen that are going to be outside of what I thought was going to happen this time of year. I just feel like there's going to be a bit of a purge come, and I think a lot of dealerships are taking a look at that. I guess. What do you think, and what's your opinion of that?
Yeah, I would agree with that. To your point on those tractors, you said over 350. So like between 369 and 371, would you say there's quite a good supply?
Yeah, there's quite a good supply in that range for sure. Yeah.
There is inventory it's better than it was, say, 18 months ago at the dealer level, but it's a long ways from where it should be for where we're at in a market.
More help.
So yeah, you're spot on with they're going to be more purge. It makes perfect sense that there would be. We're sitting here, we're heavily entrenched in the planting doldrums right now.
Right.
So if the phone rings, it's probably a bad situation.
Yep.
Yeah.
Yeah.
I need this, but 3 days ago. So
more help.
I mean, as we have that going on in the market. To your point with combines, I would agree with that because
more help.
The sheer numbers of them are not. The problem with combines isn't their numbers like it is row crop tractors.
More help.
Combines.
More help.
Sprayers, I think, are dipping their toe in both pools a little bit just because the technology that we're in with sprayers, especially, that has forced a lot of sprayer rollover, if you will, where there is a glut of back supply, more so than what is normally digested. And we've talked on here for years.
More help.
The sprayer market is boiling or frozen.
More help.
That's its
right, yeah.
That's its two playgrounds. But even though it's that way, it cleans itself up real well. Typically.
Yep.
The beauty with sprayers is they hit a point where they go south, they go across the pond. And they always have, they still do.
More help.
We're at a point where there is a big slug in the almost new to sellable to get those rigs in where we can flush them out. So, but back to that point with sprayers and combines, it's
More
not as much numbers of units, but the price per unit is astronomical compared to the last downturn, if you would, you know. And the combines being 5 instead of 3 are actually a bigger problem than the tractors being 4 instead of 2.
More help.
Right.
More help.
Yep.
More
And
help.
that just comes down to
More help.
$4.50 corn or $4 corn and 8% interest, and
Yep.
you know, it 200,000 is 200,000, but you're
More
starting another 100,000 more.
Right.
You know,
Yep.
and that
More help.
8,000 hour
More help.
14 model 8R,
More
you know,
help.
370, 320, whatever,
More
that
help.
you're going to upgrade
More help.
is
More
in
help.
it's in a better position in its market
More help.
than whatever your combine is.
Yeah. Oh,
Just because if that combine skipped a year or 2 in its
More
normal
help.
life cycle,
More help. More help.
it has got a huge bill coming in the shop
More help. More help. More help.
that
More
comes
help.
out of your value,
Mhm.
or you do it, run it one more year, then trade it. Either way, the expense is so much higher in that combine world.
More
We
help.
just don't have the.
More
This
help.
guy usually has 1 and bought 5,
Right. Yeah.
like we do in,
Yeah.
in tractors, you know.
Mhm.
So the supply is there. It's going to have to go somewhere.
Yeah.
You know, but being on the dealer side, we all were here. We all lived it, drank all the Kool-Aid. And in fall of 23, when some
help.
dealers started chopping wood,
More help.
a bunch of guys jumped in the boat. And, you know, October 23 to say May 24, April 24 was
More help.
auction palooza.
Yeah. A lot of sales happening.
Every day was auction limbo. How low can you go?
Yep.
Everybody quit.
More
Like,
help.
okay, that we got to stop. You
More
know,
help.
talking to dealers across the country, we can't keep doing that. That does
Yeah.
not work. So everybody kind of stops. All
More
the
help.
dealers are doing a lot of internal programs and, you know, everything to try to keep the glut of flowing.
More help.
Slowed
help.
up again.
Yeah.
Something, you know, so
Well, I think some of the biggest driving
I
factors
think
behind what you're
things
just
got to
talking
change,
about.
and the way that's going to change is there's got to be some flush.
Well, I think the biggest driving factor, though, behind what you're talking about, from the overall economy of what is the equipment business, right?
Right.
I think the biggest driving factor is that things haven't gotten worse; they just
More
haven't
help.
gotten better.
Right. Nothing's
Right.
changed.
Yeah.
Nothing,
So
if anything, it's gotten a tick better.
you still have, everyone had that anchor tied to their leg, and they jumped off the boat and they sank real fast, right? Well, they hit the bottom now, and they're trying to swim up, but you can't go anywhere. And so that's really driving some of this. The idea behind taking
More
huge packages to auction is to lighten the load that you're at the dealership, trying to lighten your load of what you're getting through, right? Take
Right.
care of the interest situation that you're working through, trying to get through too many of one thing, and trying to kind of thin that down a little bit to where you can go back in and have those conversations and start selling stuff through there. Well, everyone did that, and typically after you do that, you start seeing, if you go back and look at coming out of 14, which was when things really took off. So it was all of 15 and part of 16 when the auction thing happened. Well, after 2016 happened, you started seeing a smoothing out of the marketplace, right?
Mm-hmm. Right.
Right now we're seeing, and I'm not saying it's going down or it's choppy right now or anything like that, but what I'm saying is that coming out of 16 to 17, the market was kind of slowly coming up, right? And I can argue right now, we can show you the data that shows auction data is year over year is coming up, month over month, quarter over quarter. It's all coming up. The
more help.
The issue
more
that
help.
we're running into is that back then we had 1.5% to 2.5% floor plan interest. Today we got 6.5% to 8% floor plan interest.
Right.
So that it just accelerates that need to get stuff turning. I think
each
that's
piece
where
is
we're at.
$350, not $150.
Exactly, right? 'Cause I remember you and I would sit down and we'd start going through our spreadsheets of stuff we were going to look at, how things were going to move, and those kind of things. And back then, we were talking like, man, can you believe that our average machine right now is $175,000? You know, I mean, and now we're telling you have that same conversations. Can you believe
Right.
our average machine cost is $450,000? You know what I mean? So you start. It's a whole different animal. And when things stay the same, and you're not seeing the movement up, it's like the acceleration. Yes, you thinned out your inventory, but the acceleration of interest and what that does to your cash positions and all the different stuff that's out there, it still stayed the same.
Right.
So the same draw that you were faced going into the situation when things were coming down is still there. The same pressure is still there. So until you start seeing some alleviation of either overall inventory dollars or interest costs, the Fed comes out tomorrow and says, all right, we're slashing it down by 5%. We're going back to 2.5% tomorrow. That's not going to happen. So, I mean, it's just one of those things that even if they drop interest rates a whole percent, it's still going to be a ton of pressure on you, right?
If the Fed comes out tomorrow and says they're going to drop at 5%, there'll be another dread show in the ice states because all the dealers will exhale at the same time and flatten everything
down, right? But so I think that's some of the issue that we're seeing right now. It's just this weight is still on
more help.
There's still somebody with someone has their foot on someone's neck. It's just not as tight as it was to start with. You still can't breathe, right? But you can just slightly breathe. And I think that's where we're at.
It's still that foot on the gas, foot on the brake.
Right. Yeah. You're because beforehand, you're trying to do the whole power brake thing. You couldn't get the tires to spin. Now you're kind of sort of getting some slip, right?
Right.
And it's starting to kind of turn a little bit. But you still don't have any smoke rolling off the back tires, and that's
right.
That's where we're at. And I think that as moving forward, as we're going through this,
more help.
I don't want to. And here's the thing. I'd be honest with you. I think you could go out and put the same level of auction stuff into the marketplace and run it through there, and it's not going to change the value of the equipment. Because here's why. If it does change the value of equipment, then we're done.
Right.
We're right back to where we're gonna sit and wait. It's just like a farmer, right? No one's going out there going like, guys, it's $3.50 corn. Let's go run some trucks to town real quick and go sell some corn. No one's doing. They're going to wait till it comes up, right? They're going to leave it in the bin and they're going to wait till it comes up, right?
Store and ignore.
And so I think that's the situation that we're in on the equipment side, right? Very much the same way. We've hit that. Okay, well, we're good here. We're willing to do this right now. It doesn't feel good, and it's not as healthy, right? But we're not. I'm not going to cut my legs off to lose 100 pounds, right?
No.
That's just. And I think that's the situation that we're in. If we get below that, you're going to cut your legs off to lose 100 pounds.
Store and ignore doesn't work real well in the farm equipment business.
No, it doesn't. So
not unless you're collecting old 20 series or something like that. But
there comes a point in time where you have to sit back and say, we'll have to be more creative in what we're coming up with. And we're there. We're doing that. We're seeing people do that. But the situation is
more help.
The pressure hasn't been alleviated, and I think that's some of this, because some of the stuff that I've seen out there, some of the people I've talked to, some of the information you talk to auctioneers and those kind of things. There's some people that have said, "Hey, we're done selling auction. We're done with the auction business.
Right.
We're done." To like, I don't know, man, we need to do another auction. You know what I mean? And never say never, because I think that's popping back in, and that's where we're at right now. It's still feeling that pressure.
Yeah. Never say never applies to anything and everything, every single avenue known to man to move a machine until we're all healthy again.
Right.
And that is so far away.
Yeah. And I also think too that you hear that word popped around like, hey guys, we're healthy in what we're doing. We're healthy in what we're doing. I'm like,
right.
Okay.
Perception.
It's a perception thing. I can walk 3 miles, but I can't run 3 miles. Right. So which one is the more healthy? Right.
Right.
I mean, so it's an all perception thing. So you hear that get bantered around a lot, and I think different people have different levels of what feels good to them or what they're willing to tolerate is probably the better way to put it.
Yeah. Well, and it comes down to
more help.
You might have one dealer group that is, we're going to, we look at it there you go. It's perception. Everybody looks at it a different way. If we're not banging out this, we're not healthy.
Right.
Or, and that's the only way they look at it. It's not an inventory thing. Inventory means nothing. It's how are we clicking?
Right.
Is the train moving down the track? Other guys are less concerned. They don't even look at the train. They only look at what's going on at the depot.
Right.
You know?
Yep.
Because if everything's good here, the train can be doing whatever it wants, you know?
Right.
So, and those two are vastly different mindsets that get to the same end.
Right.
You know?
Yep.
So it's kind of the way it seems to go is you have your the more concerned about inventory, sitting inventory versus how are things moving. That group is it seems to be more proactive. To use some ag terms, they're an early adopter of inventory liquidations.
Right. Yeah. Yeah.
You know,
well, the first guy makes the most money.
That is how they look at it. In this box, it's spilling out all over the top. We got to fix it.
Yep.
And the other guy's like, well, we're pulling a little off the top every day, and the hopper is going down, so we're gonna keep this.
Yeah.
So there's
more help.
That comes into what happens in the market too.
More help.
And that isn't as often as discussed because it's hard to, go, well, these 10 dealers do it this way and these 15 do it this way, to silo everybody like that. But those are factors in what happens out there.
Right.
Yep.
For sure.
More help.
It's unless you're going just base financials all the time, and that's not how it is all the time. It's perception.
Yeah. Well, it's what you tolerate. I think that's what it comes down to. So
what you're used to and what feels right. And if you were still here in 22, things must be okay. You made it that far.
Yeah.
Yep.
So I think overall, it's just one of those things when you're looking at how the market's going to play out. To me, I see a robust auction marketplace. I think it's going to start firing up.
More help.
I haven't seen any big sales, like in big ticket sales or anything like that. I mean, of course, you got onesie, twosie consignment things, those kind of stuff popping up, but I haven't seen the big, hey, we're going to sell, 35 combines and 65 tractors today. Like
a 65-page color catalog in the mail.
I haven't seen that. I haven't seen that one yet. So
70 million in 6 hours.
So yeah, but I think it's coming, but I don't think it's going to mess with pricing. I think the pricing is going to stay. You might see a little fluctuation here and there, those kind of things, but it's not going to be like, oh wow, we lost 25% of the market today. Like that's not going to be like that. It's going to be very
more help.
Very much
more help.
Best way to put it. Very much this is like when we'd go watch auctions in late 15, early 16, and it would be like we'd play the game who got the closest, and we were within $100. You know what I mean?
Right.
Like, because that's just going to be, everyone knows what the price is, and that's just what it's going to be. So it's going to keep things moving.
We had one of the hottest, not value, activity.
Yep.
Hottest auction markets that we've seen for the last, say a year ago, and it was a year before that.
Yeah,
we saw it. There were plenty of soft bottoms put in.
Mm-hmm.
So yeah, we know where stuff's going to be. That thing is only going to fall so far before everybody jumps on it.
Right.
There are levels where, good Lord, somebody. And they're more than happy to jump in at that point.
Yeah.
So then from there, you chink back up to where's the walk away, and there's your auction. Okay.
More help.
That being the case, unless I'm just solidifying your point, Casey. Unless
more help.
Soft bottom would disappear,
more help,
and have a whole other reset, which would be the only time I can think of in farm equipment where you have, you're at the bottom and then a blink of an eye reset lower again. That hasn't happened.
Yeah.
It just doesn't, because you get to a point where it goes, it leaves. That's it.
Yeah.
There is no auctions do not have a finite or an infinite drop. There is a finite bottom there.
Well, yeah, that's where the market's at, and that's
right.
Once people start buying, that's where that's at, and it starts working its way up from there. It's just like corn. You watch the corn market. It gets low enough, everybody starts buying it, and then next thing you know, it goes up a quarter.
And to that point, so we will be, say it's a fall, your pre-harvest auctions in August start flaring up, and here we go. Ads all over, and they're huge, and dealer auctions and all this. It will have been right about 18 months since the stop of the super active auction market, right?
Yep.
That should carry everything forward. And what has not happened in 18 months? Nobody that's built new machinery has lowered a price.
Well, they also built less equipment too in that time frame. So you're given an opportunity to have the supply catch up with demand. So
which is going to do nothing but help the glut.
Catch up with supply. Yeah. So, okay, good place to stop. Folks want to reach out to you and get more information about what you're doing. What's the easiest way to do that?
I'm on all the social medias by my name, Aaron Fintel. You can call me, text me, 308-760-1193, or shoot me an email, afintel@21equip.com.
Right on. Casey Seymour, you can find me on all the social medias at either Moving Iron Podcast or Moving Iron LLC. You can check me out there. Go to AgWeb to see to listen to the audio version of this, and check out Farm Journal's YouTube channel, which you can see the video version of this as well. I want to thank John Deere for being a sponsor for this edition of Moving Iron Podcast. So for Casey Seymour, Aaron Fiddle, Sean Hackett, Greg Machinery, Pete Peterson, thanks for listening. Let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.